Hello my fellow investors and welcome back to another stock analysis video as well as earnings report. And today we're going to be taking a look at the company Adobe's earnings report as well as do a quick stock analysis on them as well. Now this one was brought up by Itai Cohen a while ago, and sorry that it took so long, but this is actually a company that I have done on the channel a lot. I believe I have like 5 videos on this company, I kid you not. And every single time I've done an analysis on this company, I have gotten numbers like in the several hundreds above what it currently is. So I'm expecting pretty much the same thing. And I gotta be honest with you guys, like straight off the bat, I absolutely love this company. I really do. Subscription companies are just amazing, and Adobe is just it's just an amazing company. It really is. Wait until you guys see those fundamentals. But nonetheless, let us get started with this analysis. So let's get started with their earnings report summary. They just had their earnings on the 15th of March. EPS normalized actual came in at $3.80. That's a lot, guys. That's a lot. And it's still beat by 12 cents. EPS gap actual, $2.71, beat by 6 cents. Revenue actual, $4.66 billion, which is beat by $30.27 million. So let us get started with their earnings report. And like always, this will be linked in the description below for you guys to read for yourselves. So I'm not going to go over it. I mean, again, seeing that this is not financial advice or even due diligence, this is mainly for entertainment and to give you guys a guidance as to maybe what to look for in a company. All of this, guys, will be linked in the description below, as well as the calculators too, so that way you guys can use it at your own leisure. Nonetheless, though, we got over here the earnings report for Adobe, and we're starting off with the CEO's comment. Adobe drove record Q1 revenue, and we're raising our annual target based on tremendous target opportunity and continued confidence in our execution. Absolutely amazing. Absolutely amazing. Love to see it. Said the CEO of Adobe, Creative Cloud, Document Cloud, and Experience Cloud are mission critical in fueling the global digital economy. Quote, our strong engine of innovation combined with world-class operational rigor drove profitable growth in Q1, setting us up to deliver another strong fiscal year, said Dan Durn. This is the CFO. Adobe is better positioned today than we've ever been to serve our customers globally. Yeah, and yeah, I mean, wait until you guys see these fundamentals. They're absolutely insane if you guys haven't seen them yet. Let's actually go over now the highlights for fiscal 2021 first quarter 2023. Adobe achieved revenue $4.66 billion in its first quarter of fiscal year 2023, which represents 9% year-over-year growth or 13% in constant currency. Diluted earnings per share of $2.71 on a GAAP basis and $3.80 on a non-GAAP basis. GAAP operating income in the first quarter was $1.6 billion and non-GAAP operating income was $2.13 billion. GAAP net income was $1.25 billion and non-GAAP net income was $1.75 billion. Cash flows from operations, absolutely love it when a company tells us this right off the bat. It was $1.69 billion, essentially $1.7 billion. Remaining performance obligations, RPO, existing the quarter were $15.21 billion. Adobe repurchased approximately 5 million shares during the quarter. During the quarter, guys, they bought back 5 million shares. And Adobe's price is not cheap. Adobe's price is not cheap at all. So the fact that they were managed to do this is actually really good. Again, they don't pay out the dividend either. So the only way that they can actually give you some profits back is just in the form of share repurchases. And looking at now the first quarter fiscal year, we can see that the digital revenue segment was $3.4 billion, which represents 9% year over year or 14% constant currency. Creative revenue grew 2.76. I believe this is like Photoshop and like Premiere and that kind of stuff, representing 8% year over year growth or 13% constant currency. Document Cloud revenue, $634 million, representing 13%. All of this is just amazing. This is double digits. Well, not double digits every single time, but very close to double digits every single time. That's really good to see. Net new digital media annualized recurring revenue, that's a mouthful, ARR, was $410 million, exiting the quarter with digital media ARR of $13.67 billion. Creative ARR grew to $11.28 billion, and Document Cloud ARR grew $2.39 billion. Digital experience segment revenue was $1.2 billion, representing an 11% year-over-year growth or 14% constant currency. Digital experience subscription revenue was $1.04 billion, representing 12%. Guys, this is just amazing. This is just killing every single time. Like I just read something, it's just like beat, and not a small beat either. That's really good to see. see. And of course, let's take a look at their targets for 2023. We got over here the following table summarizes Adobe's updated fiscal 2023 targets. Digital media net new ARR of around 1.7 billion. Earnings per share, look at this. They're expecting $10.85 to $11.50 on the GAAP basis, and then on the non-GAAP basis, $15.30 to $15.60. Looking at the total revenue, $4.75 billion to $4.78 billion. Digital media net new ARR, $420 million. Digital media segment revenue, $3.45 billion to $3.47 billion. Digital experience segment revenue, $1.21 billion to $1.23 billion. Digital experience subscription revenue, $1.06 billion to $1.08. And the tax rate? Tax rate on a GAAP basis, 21.5 and non-GAAP 18.5. And then earnings per share for the second quarter. I forgot to mention that this table right here is for the second quarter of 2023. It is estimated $2.65 to $2.70 on the GAAP basis, and then on the non-GAAP basis, $3.75 to $3.80. Right over here, we also see targets assume share count of 480 millions per second quarter fiscal year 2023 and 456 million for the fiscal year 2023. So that was a lot, and everything's seeming in the positive. Now let's come into the calculator. We got the ticker symbol for ADBE, market cap of $175 billion and a PE of 37.66. So that's already looking kind of scary, especially with a current share price of $381.90. Taking a look at the graph, we can see that on the 1 year, they're down almost 17%. Year to date, though, they're up a whopping 13.35%. 52-week range is $274.73 to $473.49. We are pretty much in the middle of this 52-week range, with the current share price up again $381.90. Now, as I said, they do not pay out a dividend, which means all of their cash flows going straight into themselves. And take a look at this cash flow, guys. On the 5-year average, $5.475 billion. That's the average for the past 5 years. Last year's free cash flow, it is $7.4 billion. That's absolutely insane. Absolutely insane. It's not too much of a jump, which means that most likely they are increasing it very, very slowly, which is what I love to see. And it's bigger than the average, which is again is showing that it's growing as well. So with that said, guys, let's come into the fundamentals. And now here's where the fun begins. We got the net income 5 years ago of $2.6 billion, 1 year ago of $4.75 billion, increase of 84%. Now the net income is actually, I guess you could say, the worst one of the profit metrics, and I'm still giving this a 75%. But take a look at this. A very, very good increase from 5 to 4 to 3 years ago. 3 years ago, again, massive spike going from 2.9 to 5.26. But that's understandable because it was COVID, right? People were at home. People were probably doing a lot of Photoshop, Premiere, that kind of stuff. Not surprising. And then as of 2 years ago, they came down a little bit, going from 5.26 to 4.8. But you can see that even as of 1 year ago, though, they have been kind of going down even still, but kind of relatively keeping that same $4.7 to $4.8 billion kind of range. So again, I'm giving this a 75%. Not really many outliers here. Looking at the free cash flow, this is where it just pops. 5 years ago of $3.76 billion to 1 year ago of $7.4 billion. My voice is cracked there because I'm just amazed by this. Increase of 97% with an average of $5.475 billion. We just saw this. And the fun part about this, or at least the amazing part and the great part, I can keep putting adjectives to this. Take a look at this. Very, very consistent increase. Year over year over year. Not really much any outliers anywhere. I guess you could say from 3 to 2 a little bit, but not really though, right? I mean, really that doesn't look like it. So I'm giving this guys a 100% for the free cash flow. And it continues into the revenue. Take a look at this. $9 billion 5 years ago to $17.61 billion, increase of almost 95% the 5 year. And this is even better than that of the free cash flow. I wish I could give this higher than 100%. I'll give it like 105. But you can see that like when the trend line hits every single part of the graph every single time, that's really, really good to see. So another 100%. Looking at the total assets minus total liabilities, this one could be better, but you can see a pretty good increase from 5 to 2 years ago. And then as of 2 years ago, they came down a little bit from 14.8 billion to 14 billion. And they've increased it a little bit as of today to 14.21 billion. Overall, though, still really, really good. Average total assets is 25.2 billion. Average liabilities is almost 12 billion. Doing this difference, we get $13.4 billion. I'm giving this guys a 95%. Into the cash flow minus the liabilities, kind of stagnant, but they did have a couple years here where they were getting closer and closer to zero. Notably, 4 years ago to 2 years ago. As of 1 year ago, they came down a little bit by around $200 million, but again, that's nothing too badly. They're still significantly under, well, I wouldn't say significantly under, but they are under their average, which is negative $5.768 billion. So I'm giving this guys an 80%. And now the shares outstanding. This is another, perfect, absolutely perfect metric. Like chef's kiss perfection. We got 5 years ago of 487.7 million shares to today of 459 million shares. That's a decrease in the 5 year of almost 6%. And we just saw their share prices, guys, and we just saw that they have bought back $5 million in just the first quarter of 2023. So see that their price is $300, $381, and they're still buying back shares in the first quarter. In the 5 year, this is still going down 6%. This is amazing. And on top of that, even from the previous year to the current year, it's still a pretty decent decrease of 0.65%. So yeah, not a single year did they increase it. I don't think they'll increase it. Therefore, I'm giving this a 100%. And lastly, when it comes to the cash equivalents, they currently hold $4.1 billion with an average of $3.5 billion. And now looking at the overall grade, I mean, I gave this thing 300s. So what do you think it's going to be? Net income 75%, free cash flow 100%, revenue 100%, assets minus liabilities 95%, cash flow minus liabilities 80%, shares outstanding of 100%. Yeah, it's 93. It's a 93 grade. This is an A+ company when it comes to their fundamentals. And I mean, I just showed you guys. Their earnings report looks amazing. Their fundamentals look amazing. It's not perfect, but don't get me wrong, it's still amazing nonetheless. Now the question is it a good price to buy it today? Because just because their fundamentals are good, actually great, that doesn't mean that the current share price of $381 is a good price today. So let's figure that out using discounted free cash flow. So here we go. First off, again, reminder, current share price $381.90. Not inputting anything, guys, just keeping the required rate of return 10%. We can see the target share price, not adjusting for debt, $171.42. But then adjusting for debt, this jumps $351.71. They have no debt. They literally have no debt in comparison to their cash and equivalents. So any number, like, I mean, right here, we're $30 off from the current share price. So if I put in any positive number in this general direction, guys, it's gonna go up a lot. So let's actually do this. Let's come over here into the growth tab. We can see that the forward revenue is estimated at almost 11%. Now, I'm going to be a little bit more conservative when it comes to that. And I'm going to say something along the lines of, like, let's say 6 and 8 for the median. And let's bring this to 10 for the highest. So the highest will serve as very, very close to that of what the growth assumption is saying on Seeking Alpha. Now for the projected share buyback, we have been seeing that they've been buying back very, very consistently at a pretty good rate at around 5%. More or less 5% to 6%. So let's say for the next 5 years cumulative that they'll do 3%. And then let's say 5% for the median and let's say 7% for the highest assumption. Let's just say this, right? I mean, 5% is pretty much on par with what they've been doing, and 6%, well, actually, it's technically 6% because they've been buying back 5.88%, so technically 6%. But I say that, you know what, let's say that they become a little bit more aggressive in doing this, and for the highest assumption that they do 7% share buyback in the next 5 years. For the lowest, 3%. With this, guys, we get the target share prices of $218.06 to $259.96, essentially $260, not adjusting for debt. And then adjusting for debt, this is the one that gets me every single time, and every single time my jaw just drops because, yeah, you guys are seeing the number, $445.25 to $529.45. Yeah. With a margin of safety of 5, 10, 15%, this is $378.47 to $503. This is insane. So if you guys believe these assumptions, right? Because at the end of the day, it's not financial advice. As I said, this is why I give out all of this for free, as well as the earnings report will be linked in the description for you guys to read for yourselves. Please do not take my word for any company that analyzes or anybody in the internet that analyzes companies. Please do not do that, because the last thing I want, guys, is for your hard-earned money that you work a 9 to 5, wake up at 5 in the morning and go to, like, 4 a.m. or 4 p.m. or 3 p.m. every day to support your family. The last thing I want is for you guys to lose it. So please do your own due diligence. Please read their earnings report. Please read their 10Ks. Please go further. Figure out what management is doing. Do some qualitative analysis. Do some technical analysis if you so wish to do so. Maybe if you guys want some technical analysis on this company, maybe you can ask Mike to do it for you guys in the next upcoming videos or so. But again, please do not follow exactly what we're doing, guys, because every investment is the present value of all future cash flow, and this is not financial advice. But if you agree with these assumptions, or if you think that these assumptions are somewhat close, guys, this is an all-out buy. Just by, like, yeah, even with the lowest assumption, even putting this number, this projected share buyback at like 1% for the lowest assumption, it's still $436.38. So, by the looks of it, this is looking like a very decent buy at the current moment, and it has been for quite a while. I don't know how long this will stay like this, but if you are investing in the long run, like 20 plus years, then, this might actually be really, really good. But as I said, guys, it's not financial advice. Please do your own due diligence. And the best way that you guys can support us, it is by liking, subscribing, commenting, and of course, sharing with everybody that you know. Because, obviously, if you guys want to donate us, through like super comments or whatever it's called, I don't mind that. Don't get me wrong. But the best way that you guys can help us is help us grow. Today, we touched, I believe, 2,300 subscribers. So that was a big ass milestone. So thank you very much for everybody who has done that. Thank you for everybody who comments. Obviously, the common ones like KLL and Tony, thank you so much. KLL, please do not think that we don't like your comment. We like your comments. Like, please continue to comment. Thank you very much. So again, when it comes to this company, by the looks of it, it's looking really, really good. And please do your own due diligence. The best way that you guys can help us is just like, subscribe, comment, and of course, share. So let's actually take a look at the options for this company, because in the past videos I've done, I have not done this ever. So let's see what this company has to offer. First of all, they have weekly puts they have weekly options, which is really good. It shows that they have a lot of liquidity. For the March 31st, obviously you guys are going to see this on the 31st, so these premiums are probably going to be hot garbage. They're probably not going to be anything, right? But for the puts, we can see that there's a lot of liquidity. Guys, there's a ton of liquidity, like a ton of liquidity. And if you want to hedge your bets, for $380 strike, you would get, well, as I'm recording this, it is, 7:30 p.m., so market's closed. But you would get $140. And for the calls, guys, $180. Now, what I want to do is go out. Let's say that you actually do have, $38,000 worth of this company, i.e. 100 shares, and you want to sell a covered call for this. I want to go to like January 19th, 2024, and let's see if we can actually find some covered calls in regards to that 500 strike. I mean, remember, it was 529? Yeah, so let's say at around like 530, I would say. So for 530, a covered call for 530, guys, you get $725 by January 2024. So if you don't mind getting your shares taken away, again, this company doesn't really have any dividends, so that's good, I guess you could say, right? Because you're not missing on any dividend income. But if you guys were to sell this thing, let's see, if you were to buy this thing right now at $382, and let's actually pull up the calculator here a little bit. So we got $381.90. So let's just bring it up to like 382. So if we do 382, oh, actually, sorry, 530. So $530 minus 382, this would get you a difference of $148 per share. So if we multiply this times 100, then that's a plus sign. 1 second. If we multiply this by 100 shares, guys, we get a capital gain. We get a capital gain of $14,800. That's a capital gain, by the way. Plus the premium of $725, which you would have gotten by selling this thing at a strike of 530. This would net you guys a total profit of, let's see, plus 725, $15,525. That is absolutely insane. Oh dear Lord. Yeah. To those who want to do it, or to those who can do it, there you go. So that's amazing. That's like almost a house payment. That's like half of the house down payment. That's absolutely insane. So again, guys, those are the options change when it comes to this. Definitely more profitable when it comes to the covered call size. Not so much the puts, but if you got it, you know, and you want to sell at 530, then by all means go ahead and do it. Again, not financial advice, but that is how much money you would get if you were to do that today. All in all, thank you so much for the recommendation. I really love this company. I really do. I wish I had $38,000. I really wish, because I honestly, like, I'm very me personally, I am very confident that this company should be worth $500 plus. I really do think so. Again, I'm not telling you guys what to do, but I have a lot of conviction that Adobe should be worth $500 plus, right? Or if not $600. So that's just me. I really wish I could buy into it, or at least that much of it, and then just start selling covered calls. Just start selling covered calls at like higher prices every single time, and just make that capital gain, because I won't really get affected by the whole entire dividend income because it doesn't have any. But anyways, thank you so much for the recommendation, Itai. And yeah, hopefully this helped. Like if you like, comment, subscribe. It really does help with the algorithm on YouTube. You guys can follow us on the new tech sites. Link is in the description below. So with that said, peace out, and we'll see you all in the next stock analysis video.